Good day, good afternoon, traders. Today we are going to look at Forex trading, and we shall analyze three pairs and one synthetic indices. So let's go to MT4, which is MetaTrader 4. So open the MT4 application so you can see this GBP USD, and we are going to analyze GBP USD, Euro USD, and gold, and all these pairs are positively correlated. Let me go to daily time frame. So let me use this arrow and observe where it is pointing. So you can see from here there was no break of structure to the upward, since this is the rejection wick. But when we go here, we can see break of structure to the upside, which shows we are in an uptrend. So if I want to mark the bullish order block that led to break of structure, I would mark this one here. All right, and price has not yet reached there. So this is what I would mark, and you can see price is still moving down. So this is just like a retracement to what I see. From there, it can either continue the upward movement or reject the blue line to form a head and shoulder pattern for a bearish structure. So let's go to lower time frame, and as we are doing top-down analysis. So we are here on H4, and you can see I have marked this one where price is just reacting this trend line on the left side. So like it reached here, it reacted upwards, it reached here again, it reacts. So when you see these candles which are close, they are so much close, there is no space in between. You have to be very keen. Be very keen and don't rush into a trade, because such candles are always used for grabbing liquidity. All right, so let's go. Okay, what I want to do, I will have to mark, pick a trend line, and I just draw the highs of those candles. You can see that is equal, right? So let's continue to H1.
Using XNES Broker.
This is what I have just marked.
Using XNES Broker.
And I'm using XNS Broker. So you can see there is equal highs here. Liquidity, it can choose to grab it, and it stops here. It fills this gap between this candle, like 1, 2, 3. So it can choose to fill this FVG fair value gap. Let me show you. So for example, the gap in between here. So this is the gap I'm talking about. It may decide to come and just do something like this. For example, the gap in between here, it can come here and it drops. Okay, either way, it can continue upwards like this, and then it drops. You have to be prepared to accept whatever price shows you, as it is expressing itself to give you information to take advantage of. And for me, of course, I will give it time to play out. Mainly, I go to lower time frame when I have seen that the higher time frame is or has confirmed something for me. That's when I go to lower time frame to pick an entry, and that is 30 minutes, 15 minutes, and M5. Usually I use M15 and M13. Let me first delete this. For beginners, to delete this, tap and hold, and then the delete option will pop up. What if it closes above, comes back? What if price just reaches here, as I have told you, and comes just back here, right? And you begin seeing rejections around here, like this. Also, this is possible. You can pick a buy. Of course, here we shall have seen what we call a break of structure to the upside, and whether it will be in line with our uptrend. So you can pick a buy, and you continue riding to the uptrend, and you target this zone here, right? Okay. Going to lower time frame, there is no viable setup. Now that we are done with GBP USD, let's go to Euro USD. Click on this top right symbol that looks like a dollar sign, then select what you want. Like me, I want Euro USD, so I will select that. Why am I having only like a few, like 1, 2, 3, 4, 5, and 6? only those 6 pairs are the only ones I'm interested in, but you can add if you wish to. However, particularly I consider this one, and gold. Mainly those are the ones I trade. The rest I rarely look at them. And BTC or Bitcoin USD, I look at it, especially when I want to, to do what we call spot trading on other platforms. So let's go. By doing top-down analysis on GBP USD, let's go to daily time frame. So daily, now we saw a buy, something like a buy on GBP USD. So this one, I'm also thinking price is likely to move here, right? And it comes back like this. That's what it looks like. But of course, we cannot tell what to do. We have to wait and see what price is playing around, and we go by what shows us. So when I drop down on H4, you can see there is liquidity here, right? There is liquidity here, equal loss, right? And price still has to fill this gap. So I would mark something like this. Just tap in the middle to get this one. You click here, right? Then you will see this pop up. And I'm going to choose this rectangle, right? Then I can maybe mark my. This is an order block that relates to the break of structure that has imbalance. So I can also count on it. Can as well do this, come here and come here like this. But on a daily, we saw something like a break of structure here. So you can see this is the break of structure. So we want to see price can stop from here, or it can grab these equal highs. There is also liquidity here. Here. So actually, when there is a liquidity, do not mark that order block, which means this one. I'm supposed to remove this. When you see equal highs, do not mark that order block because there is liquidity residing there. So if price does not stop from here, I'm expecting prices likely to do this. So among that, I want to see an agreement between Euro USD and GBP USD. Once I see that they are doing almost similar things, I'm likely to know the direction of this asset. It adds, or it works as a confluence, right? So let me delete this one. Let me get back to H4. So I'm still waiting. Price, can do anything, right? Let me go to H1. I was saying you mark the lows and the highs. And here you can also mark this one. And this one. Okay. So as you can see, there is also this break of structure to the upside here. Let me show you. So there is a break of structure here. Okay, this is what I'm calling a break of structure, the upside. So when it came down here, all right, let me just mark it well. So when it came back down here, it was not able to break this low. This could be the low. This was the low. But price wasn't able to break this low. So since it was not able to break this low, we shall say this is a strong low, this is a weak high, and it is likely to be raided, okay, or broken. So once price closes above and the retest, rather comes to for a retest and continues to move up, we can expect price is going to fill this entire gap right here. We can say price is going to fill this gap, or we can as well continue So what are we interested to do? We are going to wait and see what price is going to do on this high. All right, if it closes above and again shows the double break of structure, followed by this low here, although this low has liquidity, we can see what price is likely to do, and we take an opportunity by taking a buy. All right, so but if it rejects this one, then we can continue selling because we see a break of structure to the downside here, right? We cannot forget that one. Okay, another area of significance, right? Can mark this. Now, since you have already marked with this rectangle, I'll mark this significant high. Okay, here, like this. Alright, so this is also a break of structure, and as I said, we have another block. This is why price is reacting like this. Okay, let me just show you. Let me do it like this. This is another block. Price is reacting on an order block here. And if I can enlarge, zoom in or zoom out, whichever you call it, you can see the order block actually is this I'm talking about. So this is the order block where price is currently reacting on Euro USD. So we are still in an uptrend. This was just actually, we cannot call it this as a break of structure to the downside, but rather it was a grab of liquidity. Okay, when there is an order block that led to the break of structure and price grabs that liquidity in between, then it is not a break of structure, but rather you take it as a grab of liquidity. Okay, so both GBP and Euro USD, we have seen they are still in an uptrend. So before you take a buy, first wait and see where is the grab of liquidity to the downside to fuel the move up. Okay, but as I said, of course, it can reach here and react and continue to drop, or it can continue its upward movement. But depending on the side of the trend, you will most probably profit from the market than the one who goes against the trend. All right, let's go to another one, which is the last one of gold as the currency we want to look at today. So this is gold. When I go to daily, you can see what is happening. Gold is in an uptrend. So these three pairs which are positively correlated are all in uptrend. Let me just mark this one for you. Okay, so you can see this one right here. You can see this is an uptrend. This week was price closed above this high, and this is the low. So we can say this is the this was the previous higher low, right? So this is the higher low that led the break of structure here. So if you want to see, of course, price can come down away on daily. If I pick my Fibonacci tool, you can see price can as well come and stop from here in its pullback. It needs pullback and then resumes its uptrend. So it is still reacting around here. We don't know. Let's go to lower time frame. Let me first delete this one. Then let me go to H4. So when you go to H4, you can see we have already had a change of character to the downside. That means we are just selling the pullback on daily. I'll repeat it. We are just selling the pullback on daily. And as price is just dropping down, it is leaving liquidity up, which means price is likely to come back when it is resuming its uptrend and clear all this liquidity. So for now, I may not take into consideration or too seriously this liquidity, this trend line liquidity, but in the future, this tells me price is likely to come back and resume its trend, okay, which is an uptrend. Shall we go to H1? Of course, yes. Okay, let me get back my arrow. Okay. So when we come to H1, you can see this is a break of structure to the downside. Let me just mark it well. So the break of structure was here to the downside. So what I can do, let me just pick the Fibonacci tool and I show you something. All right. So price usually reacts here around the zone of 61.8 or 50, around this one, but it doesn't mean that it always stops there. It can also hit this upward trend line and continues to drop. Remember, we shall be selling the pullback, the daily pullback. All right. So be careful to buy for now. Okay, be careful to buy for now. And you see a confirmation in break of structure, like double break of structure, more especially when price exceeds this trend line or if it closes above this trend line. All right, and before that, I can also put there a moving average. Let me just put there a moving average, and you see. So to put a moving average, I'll climb on this F sign, click there, then I will place or tap on this F plus, then these indicators will pop up. Mainly I use the moving average, so I'll click there. So my settings are already there. You see that is 20 period, that's what I use. Then you go to method, I use exponential moving average, then the pixels I can leave it to 3. All right, so after that I can say click on done. All right, so once I'm done, you can see it has already come. Let me also go to the other side and see on the chart it is already there. So do you have a moving average? Obviously yes. So you can see the moving average. Yes, it is here, although it is green. Maybe let me change the color. This is the moving average I'm talking about. Let me go back and change the color. You can change the color to red. But have you seen how I have changed the color? To change the color, you just tap here. All right. Then you'll choose any color of your choice. So let me just pick maybe this one, red. So let me pick red, and I say done for the changes. All right, so you can see this is the moving average, right? And price is reacting here. So only if we see a rejection or a reversal candle, that's when you can as well sell here. But be very careful to sell in this we call it a discount zone. Yeah, we normally sell in a premium and we buy in discount. So with the premium, that is the area above 50% if you use the Fibonacci tool, which is this area up. Then the discount, you only buy below the 50. So you can only buy within this area if you want to buy, but you cannot buy when it is past this. All right, that's the normal. But however, others also have other strategies that buys even the premium. It depends on how you look at the market and how your strategy aligns with your beliefs, your trading style. Right, so let's continue. Let me delete this one. So if we go to M30, you can see you still have the ability to buy. Yes, you can buy from this market if you want risk and go against the market, and if you can do so, probably I can take advantage of this doji candle, which has closed above this previous candle. I hope you are seeing what I'm showing you. Okay, let me show you. Let's get back here. So like when this candle, this doji candle closes above this one, the previous one, you can enter. But as I said, this is too risky because for now we are selling the daily pullback. So I'm not interested in a buy because you can't be manipulated anytime. But what you can do is just the highs. For example, this is the minor high, right? Or name that, of course. See if there will be a liquidity there. Then you can also mark this one. Let me show you this. This one, let me see. Okay, good. That's also another high you can mark. And make it long. So this is the high I'm also interested in because you've seen that we have already the breakout structure, which is here. So you can even shift this one to here, right? And if I bring back my Fibonacci tool, I'll be waiting to see what's likely to happen now. In this zone. So once price exceeds here, there are two things you should expect. Number one, it is going to take out the external liquidity, and by doing so you can buy from here once it returns. Before taking out the this high, it returns for a pullback, then reject this one, you can buy targeting this high, right? So once it is done, you wait and see if it is going to reject this one or take out liquidity and you sell. All right, so we are done with those three assets. And then the next thing we are going to do is for the other asset, which is VIX10 1S, that we made a video yesterday. If you haven't watched, please check it. This is the latest video I published yesterday. All right, so let me go to, but before I go to that, we also need to check on the news, right? It is very important that you stay updated with the news so that they don't affect your trades. And to do that, I will go to Google Chrome right here. And with Google Chrome, I'm going to forexfactory.com. That's the one I usually use to check for news. So just type forexfactory.com, Forex. Yeah, you can see it is already here. Forexfactory.com. You can even copy the URL, then hit enter. So this is the platform, and the first thing I want to do is to filter only high impact news. And to do that, I will click on this filter icon here in the top right corner. Okay, actually in the middle right corner. If you are using a phone, and you can check where it is located on your PC as well. So I'll click there. So once I click there, I will just unselect all this. I will uncheck. I will uncheck all of this and remain with only high impact news, which is the red one. So what I'm going to do like that. You see? So after that, after you have remained with this one, you come here down, right, and click on apply filter. Okay, so once I apply filter, you can see it has been filtered. I'm going to remain with only that one. So the only news we have, it is CNY industrial production, which has already been released at 5 a.m. right, 5 a.m. early in the morning. So in my country it is past this time. So today I don't have any impactful news which can affect my trades. And if you want to check what is all about, just click there, just click here, and you can as well read more about this news by clicking there on that box. Okay, yeah, you can see the full details of the news. So like the source did not release Jan's data in February to eliminate the distortions caused by the 7th day Lunar New Year holiday, blah blah blah. Okay, so but I want to go to where do we get this news? The source, it is the National Bureau of Statistics of China, right? And I don't trade this Chinese currency. I don't trade the Chinese yuan. CNY, the Chinese what? The yuan. So I don't trade it. And the other measures, and you look at the usual effect, actually greater than forecast is good for the currency. Alright, so today's video is not about Forex Factory, and to show you how news can affect your trades. If you want that trade, rather that video, it is already there, but I can also add more highlights on such a video if you are interested. Okay, so that now that we have known we don't have any impactful news on our trades, let's go to the next one, which is synthetic indices. And for synthetic indices, I will have to go to MetaTrader 5, right, which is the Deriv broker, Deriv.com, formerly called Binary.com. Remember, this is the only broker which has synthetic indices. All right. So yesterday I made a video about this asset. So we were on a daily, and I said that a price is going to, grab this liquidity and probably stop from this resistance. Let me show you. Yeah, my markup was here. You can also check that video. Yeah, where I said price is likely to come and do what? Price is likely to fill this gap, just reject this, fill this gap, and continue dropping. But however, we are still in an uptrend on a daily. So for that, we need to wait and see, because price can as well continue, moving its uptrend. So once it closes past this daily candle, let me show you. To me, when it closes past this daily candle, it is no longer a bearish directional bias here, but rather a bullish structure. Okay, so let me show you how if you were interested in this asset, how you would have picked the trade, because yesterday we had only this candle right here. This is, you look at the center of this, look at the center, just look here. This one, this is the only candle we had yesterday. So let me show you how you would have taken a trade. Let's go to H4. The trade would have been here, right? The trade would have been here. And let me show you how you would have picked an entry from lower time frame, which is H1. So this is the candle that you would have used, because by the time I made a video, this candle had not yet formed. So price just came like this, like this. That's how it did. Okay, by the time I made a video, right, only this was still forming. So always pay attention to these gaps, okay, the spaces, right? Always pay attention to the gaps you see, like these ones, like here. So when price is still congested in one area, stay away from such kind of a move. You are likely to be manipulated. So the good entry would be this reversal candle, which is this one. Okay, the moment it forms, you just immediately at the current market price, buy and put your stop loss down here. Okay, and you target, of course, this area. Buy here, stop loss here, then you target this area. All right, so we are still looking at how it's going to play out, and I think this is enough for today. Until next time, kindly, if you are finding value in this video, subscribe, turn on the notification bell icon, and share the video, please, for more trading tips and analysis. Peace. God loves you, and I love you too. Until next time, we meet.